Hello, everybody. Joe Malone coming to you live on Dallas Trading Floor. It is Monday. Well, I guess it is Monday. That's not Monday. Wait a minute. What? Yeah, I guess it is Monday. Sorry about that. God, I'm confused. Hope everyone had a great weekend. I did. I actually had a pretty good weekend this weekend. Let's kind of get into it. The market is starting to show some resilience, which is kind of amazing. It did open stronger in the morning. It did fade towards the close, but the Nasdaq was up, and this is the third week that we're starting to see some strength. So, we still may be in a bear market rally, but we're definitely in a rally. So, there you go. It's just always interesting because whenever you think you've figured it out, you haven't figured it out. The market just kind of hands you hands you your hat in your hand. So, but at least for right now, we're moving well. Nasdaq Composite is off to its fastest start since 2009, but of course, we're totally beat up last year, so that may not be necessarily the greatest thing since sliced bread. So, but anyways, we are off to a fast start. There is some good news finally. And I would like to show you a trade that I did today. It's an interesting trade. It was sort of a day trade. What I was doing is I was trying to see how much I could get out of this as it moved higher. I made a little video and put it out there to everybody. I hope you saw this. It's a company called AEHR Test Systems, and what it is they make equipment for the semiconductor industry, and industry has been kind of the leading. It seems like it's going to lead us out of this pullback. Not the tax. I mean, not the normal tax. The big techs are, they're still laying off people. You've got Microsoft that's announced that they're going to lay off 12,000 people. Gosh, Google is laying off, I think, 12,000 people too. Just a lot of carnage out there. I hope if you're one of them that you've saved a little bit of money, because I think that some of the big techs are going to be tough for a while. But that's not to say that all techs are going to be bad. And one of the areas that seems to be showing strength is this test systems area. And I also want to point out some other ones as well. We have, and I haven't bought this one yet, but of course, it's AHR, and then there's Axcelis, AXCELIS. I had to look at my notes here because I couldn't remember exactly how it was pronounced. ACLS is the symbol on this one. This one is doing well as well, and so we're seeing some. We are seeing some motion here. Wanted to show you kind of the trade that I made today on AC on AEHR. Basically, where I made the trade with today was in this kind of upward motion. This is the 5-minute chart. Now, here's what I'm proposing, and that is if it moves above 35, I want to buy back in because that seems to be resistance. So what I'm doing here with this stock is, basically trying to buy in. You see, it shot up big today, and it's kind of pulled back, but it hasn't really lost that much power. This is the area of the market that I'm talking about. This is the equipment semiconductor area. Axcelis, of course, ACLS. This isn't quite as well set up as AEHR. KLAC. This is a KLAC 10 core, used to be called. Great company, kind of inexpensive. Onto another one. And there's another stock in here that I didn't put in here. It's ASML, and that one as well. So, but the one I want to concentrate on here, AEHR Test Systems, and then Axcelis, where I'm going to be buying a full position if it comes and moves beyond 35. Is AEHR. It had a tremendous day today. It's very extended, but in this market, it's the kind of thing. In this market, we've just, if we see the strength, we've got to kind of, I think, be there more than anything else. Also wanted to show you the Axcelis. This is the one I was talking about here. This is no, I'm sorry, that's Etsy. Excuse me. I want to show you this Excellus as well. So let's take a look at Excellus ACLS. This is the one that's sort of on my radar screen. I haven't done anything with it yet, but it gapped up. It's pulled back a little bit after hours, but look at the strength that's coming into this. Unbelievable. The buying was up 50%. It was up 4.8% today. That's amazing when you consider we've had such a lackluster market. This is the 5-minute chart that want to show you on that. It looks like we're settling at about 107 here. This is ACLS again, also in the test system space. Let's take a look at the whole thing, the electric semiconductor area, and it's filled with good stocks. Here's what Excellus, of course, KLA, as we were talking about, and ASML. So I'm going to be concentrating in this area. This seems to be the leading area for for the tech stocks right now. It's not in the where we're used to seeing it in the software. We're not seeing leadership there. Where we're seeing a lot of leadership is in this is in the equipment area. So that's one of the things I really want to concentrate on there as well. All right, let me show you what I've got. I definitely have been kind of trying to put my portfolio together. I'm out of all my shorts. I did close the short on Auto Nation. It was going up, so I just decided to get out of it. The market has changed really to an upward trend. Now, this may be a bear market. They're in bear markets. You have these bull runs that typically can be very powerful. But right now I'm on the long side. Currently, I have ExxonMobil. That was down a little bit today, but I did sell a call against it, so we do make a little bit of money there. Schlumberger, I wish that I had. This is pulling back. I hope that it's going to bounce at about the 54 level, but who knows what's going to happen there. Also, strength in Lattice Semiconductor, LSCC. This is an interesting stock in that it is a stock that that creates programmable logic, and programmable logic, of course, is a very big area for the automobile market. So this is an area that you might want to look at. LSCC. It was up pretty powerfully today, but on lower volume, so I'm not as excited about it. Now, towards the end of the day, I bought Shopify, and look at these numbers; they're incredible, up 46%. Now, this does not follow, of course, the trend of the equipment makers. This is then the internet commerce area. There's two areas. There's two ones that I want to show you in that. One is Shopify. The other is Etsy. Etsy is, of course, the stock of the day today. And then I'm also in Target Hospitality. That was down a little bit, and Fluor, which is a construction, large, heavy construction company, and that interesting business as well. So let's take a look at the comparison chart. Did I get it in there? Well, I didn't, did I? Okay, I had a comparison chart between Etsy and Shopify. I want to show you the Shopify chart just because I do think that it also bears some, bears a look. And it's SHOP, of course, is the symbol for Shopify. And this one definitely reversed. It's very interesting. Let's put that up. There we go. There's the Shopify chart. Okay, so great. Basically, what's happening here with Shop is that we come above the 200-day moving average, got some nice action, pulled back, and now it is closed up. This is one where I'm really looking at this one because I do think it may be, and this is not really can slim trading, but it does look like we may be coming to an area where we're finally on the mend here. As you can see, it's basically since December of 2021, it's been pulling back. It was all the way up here at 180, pulled all the way down, and then it seems as if it came up to the 200-day line. It was rejected. It made a second try, and it doesn't look like it's moving above that. So we shall see what's going to happen here. But this is one you want to put on your watching list. It's Shopify, and a lot of people have A lot of people are in have done very well in Shopify, but no guarantees here. But Shopify is starting to look good, and boy, that would be a good change to have something that for once that we could really make some money on. All right, let's get to the questions. Thank you so much for tuning in. Hey, Brad, great start off the day with Tesla. Rundown, please. Still looks like a downward trend. Yeah, this is one of the reasons. Tesla did have an excellent day today. Let's go over the Tesla chart and look at it. TSLA, of course, is the symbol. And I'm going to go to the week. I'm going to go to the daily chart here, just to kind of show you kind of what is going on with Tesla. So here's the Tesla chart, and you are absolutely right. We were still in a downward trend. And here's how you can tell. You go to the daily chart, and then you go to the peak. The peak for Tesla, and this is on a split adjusted basis, was back here in September of last year, 318, and then you just draw a line. There you go. So what's happened here is we indeed have we indeed have come above this reversal line, but just barely. So yes, it is a downward trend. It did reverse basically last week. I'm sorry, last week, but just towards the end of the week. So this is still a very, very um, a very, very shallow gain here. So tough to do anything on it. It is up after hours at 144.75, which is looking pretty good. It's got earnings in 2 days. So here's what I do. I would just sit here. I would just wait. Let's see what happens with earnings. There's probably going to be some effect with earnings here because, as you know, they're also eyeing Tesla and Hyundai are also eyeing a new plant to be built in Indonesia, which would be very interesting, kind of giving them a little bit of relief from the reliance on the plant that they have in China. So that would be a really good thing. So here's my take on it with Tesla. I think you're best off right now, and I know this is hard. Let's just wait for earnings. Let's see what happens, and then if there's a pullback, then we might be able to put something together, on a buy. But right now we got to be real careful with Tesla because it's still below the 50-day line. So here's the thing. This is kind of where I want to see it hold above that. I'm going to go over here to the technicals, and you can see it's a 50-day line. That 50-day line is at 153.84. So we want to keep, we want to hold above that. We want to go above that and hold that. That's where we could probably, that's a very, very minimum place I would consider buying it. But right now, I think you just got to watch. It's got a relative strength of 5. That means that 95% of the market currently is looking better than Tesla. So we have to be real careful with Tesla. We have to be really careful with Tesla because we could get burned on this one very easily. Hey, Charles, what are the chances of 50 basis point interest rate hike? I think, and again, I don't have any insider information here, but I do think that they are likely to hike. I do think they are likely to hike because the market, we haven't really hit the hard recession. So I definitely think there is potential for it to go higher. That's just my opinion on it, and it's an opinion, nothing else here. All right, let's take a look at people from TikTok. Thank you very much. Okay, let's see. Following those, thank you very much. By the way, Tesla. Where is Tesla going? Well, I definitely, and again, I think Tesla is going to be a tough one to trade. I wouldn't be in it until after earnings. Earnings are in 2 days. Let's put it on a watch list, but not really tradable right now. We want to see if it can move above that very critical 50-day line. So let's see if we can do that. ENLC, and let's look at that one. ENLC. Let's see how that's looking. Okay, midstream. Okay, I definitely like the area of the market. One of the stocks that I did buy today was believe it or not, bulk tanker company. Very unusual for me, but it does appear that the market for transport of oil is changing. It was, because of the war situation, it seems like there's going to be a lot more seaborne transportation of oil. And TK Tankers is one that I did buy today. Now it did pull back a little bit, but let's look at Inlink Midstream. And this one basically is it's basically this is a natural gas crude oil pipeline company. So the oil and gas pipeline company. This has been a very strong area. It looks like it's pulled back. Let's see how close to the indexes it is. Yeah, 21-day is just above it at 2.93% above that 21-day line. That's very close to it. 1250 is the 21-day line. So that's looking good. If you were to buy it, you want to buy close to that 21-day line or at about 5%, up to about 5%. That's where you want to go. Excellent checklist here. 89%. That's excellent. I like the market area that it's in. I like the fact that it's pulled back. So I definitely think you could start a position here. Now, let's look at one thing here. I want to look at this. It's called the stochastic indicator. What that is that the overbought or oversold system, overbought or oversold shares. Now, it does look like we're getting to a overbought condition. So I would be, I would see what happens. I'd put this on the watch list. I think we're getting to an overbought condition. I think we're going to get a reversal. When we get that reversal, and we kind of look like we're getting it, then I think we want to make sure that it gets support at the 21-day line. I just wanted to take a look at that stochastic indicator to see, if we, what kind of position that we were, we're going to be in there with this. But it looks good overall. Definitely, buying close to that 21-day line. That's definitely a place I like to buy. Let me just check to see what the pattern rec says. Consolidation at 1185. We're really close to that. Yeah, so that's good. That's not bad. We're above that, not much, but we are above that pivot. It's kind of been in this consolidation here, and let's show that on the chart. The consolidation basically is kind of this area here, and it definitely has kind of moved above it. So that's a good thing. But it's pulled back. Let's see if it can get support. So I probably wouldn't buy it unless I saw a blue bar there, and we were within 5% of the we were within 5% of the 21-day exponential moving average. But it looks good. Good chart. Very good chart. All right, let's take a look at Boeing. This is for Sandeep. Let's take a look at the Boeing chart. Okay. Now Boeing, has pulled back and back and back, and finally it got support, and it was, the first sector of the kind of where we started to see the turn was in the Dow. Now, 200 is a critical level, obviously, for Boeing. We've pulled back. We pulled right up to the 10-day line. I want to take a look at the technicals here, just really quickly to see how far off the 10-day line, how far off we are. Yeah, we're definitely in a good place. 21-day line, we're within 5% of that 21-day line. That's a good place. Again, that's a good place to buy it. It's got very good strength, 93. That means it's in the top 7% of all the shares out there. So it's looking pretty good in terms of that. Let's take a look at some of the fundamentals on Boeing. And that's, of course, the fundamentals are, kind of, how it's trading. I mean, that's really the thing to go. We did have, this is the last quarter was in September, and that was up 4%. Now we're expecting, the expectation here is, we are expecting an increase, but, it's not a lot. So, their cash flow has been negative. As you can see, we're going to see an improvement in that, but this company has been on the mend. Now, for many years, Boeing was the #1 exporter of any company in the United States, and I think that hopefully it can get back to that. The demand is improving, but would I buy it here? Well, you know what, I would. I'm a little bit leery about buying it. I want to wait until earnings. here's the thing, and this, I think you just got to wait till earnings, see what happens, what the reaction is, see if it can hold on to that 10-day line. So that's what I would do, Sandy, but I wouldn't do it right at this point. I would wait on it. All right, Sarah. Thank you very much, Sarah. This is one that I have. This is Lattice Semiconductor, LSCC. This has sort of been where the green shoots have been in the market. It seems like the semiconductor area, in particular the semiconductor test equipment area, has been one of the better areas of the market. So what I'm going to do here is just take a look and see if there's a good entry point. Now this is up after hours. I did double my position in Lattice Semi. I've had it for 4 or 5 days. I was buying it last week, and I did improve my position. Now here's why. You can see, there we go, that my first buy 73.50, and then we got a pullback to the 21-day line, then up once again. So basically it is this cup formation, and I do think if it can move beyond this high point here, 78.47, and we're very close to that, then I think it can move higher. The question is, can we buy it at this level? It's a little bit extended, but again, in this market, we're kind of forced to buy a little extended because now I do think we're starting to see a turn. Now I don't recommend buying typically more than 5%, but 5 to 10% you can buy above the 21-day line. More than that, you just really have to just let it go. And right now it's a little bit extended, 7.48. So if you did buy here, I wouldn't buy a full position, buy a half position. That would be probably the best way to go. Let's take a look at the 5-minute chart to see kind of what's going on here. Here's what I would do, and you can see clearly on this 5-minute chart that there is support right here at the 74 level. Now, what I would do is see tomorrow if it can move up above that 75. If it can move up above that 75, there's a lot of buying in there, then possibly you could come in there. But you don't want to buy it on a downward trend. You want to buy it as it's moving higher. So before you buy it, check to make sure, and you probably could buy it right about 75 or so. The biggest issue, though, is if you do buy it there, be forewarned that you need to put in a stop loss very quickly. This is where my stop loss is. It's right below 74. It's right here. I'm going to show you that in just a second. There we go. Reactivate that. This is where my stop loss is. My stop loss currently for Lattice is at 73.50. So you want to sort of try to buy it on the upward motion, put in a stop loss quickly, 73.50, in case it pulls back on you. But that's how I would play it. I definitely think it's a good stock. It's in a good position in the market, and it's in the right sector, at least for now. This sector is getting some love. It definitely is getting some love. So that's definitely where you want to go. All right, Tanker. This is one I did buy today. I may have regretted doing this, but let's take a look. TNK, and this was not an original idea for me. I heard in a podcast that I listened to in the morning, I heard about this one. I then looked it up and I bought it. It looks like it's doing well after hours. It's up about 1.4% in the after hours action, and it definitely looks like it's got support at the 10-day line. Let's see. I'm going to look here. Yeah, 10-day line, 28.48. It's right on that 10-day line. It definitely looks like it's getting some support. Now, long term on this one, well, I do think that, this is an interesting area of the market, and it does look like it's starting to get some support. Now, you probably want to wait until it comes up to 29 to buy it. You want to buy it on the rebound, but up to 29. I do like this stock, of course, because I did buy it. I definitely think, at least for right now, I think it's making a reversal. This is the reversal line that I have in here. It's a dotted black line, you can see there. I'm hoping that it'll move above that and, of course, get strength. Now, it's currently below that, so this is a very early entry. but it does have 97 relative strength. That means it's in the top 3% of stocks right now. So looking fairly good. I definitely think you can buy that, but you want to wait for it to be on an upward trend. Now, here, why are these tanker stocks getting so much love? Well, I took a look at the financials, and what I'm seeing is, you know, there must be a shortage of tankers out there because, this little company has very good cash flow, 22 price to earnings ratio, and the last quarter that they reported, their sales were up 141%. So that's the kind of stocks you want to look for. Now, we are getting close to where the earnings are due. The earnings are due on the 24th of February. So it's coming up, but it does look like in the past, and I want to kind of verify this, it does look like in the past, when we've had a good earnings report, it has been a blue bar the next day. That's been the case back in September. And let's look at the June. Yep, the June one as well. So it definitely has been very, the action after the earnings seems to be, if it's positive, if the positive earnings, we seem to be having a positive underlying action too. So it looks like it's getting support, but remember, this one is early. It has not really proven itself yet. I did buy it kind of early, so be a little bit careful there. But I definitely like this one. All right, Charles was talking about U-Haul, a company unfortunately, I have a lot of experience with, mostly uh, several years ago. But U-Haul, U-H-A-L, I think yeah, there we go. U-Haul, U-Haul Holding Company. By the way, you notice that all the U-Haul trucks they always have their plates. They're always Arizona plates on them. I don't know why that's the case, but they are. It's a strange thing I recognize. Getting support at the 21-day line. This is kind of a counter-cyclical company. With a worsening economy, sometimes um, companies like U-Haul do well in these kind of environments because people have to move, and so they do well. Let's take a look at this area. It's strong. 88 is a strong stock. It's in the top 12%, of course. Let's see how close to that 10-day line it is. Yeah, this is good. This is set up well. 21-day line. It's basically very close to that. It's within 5%. That's a good thing. Checklist, I'd like a little bit better, but I'll take it. The sales could be a little bit stronger. On the technicals, of course, we talked about that. And 5% above, you don't want to buy it. You typically want to buy something very close to that 21-day line within about 5%, if you possibly can. That's so to prevent you from buying it extended. Sometimes you have to buy extended. That's just the only way you can go. But that is kind of where it's at there. On the cup with handle formation, this is the pattern rack that's taking a look at this. We're just a little bit below this. This is a great, this is probably the number one formation in terms of can slim is the cup with handle. It's a kind of a rough cup with handle, kind of here, and then it's handling down. When you buy on a cup with handle, you want to draw a reversal line there, and when it moves above that reversal line, that's your buy point. It's a little bit unusual. You want to buy it on strength, and I'm going to set the alarm on that one for myself as it moves above this reversal line. That's where you want to kind of grab it if you want to go. With this one, probably go in with probably a half position if everything else is good. This is the higher high, 67.23. We're actually above that. That's interesting. No, we're below that. Yeah, that makes sense. We're just below that. So that's going to be kind of where the pivot is. Let's take a look at the pivot. Just really quick here. The pivot, yeah, 67.23. We're at 65.71. So we're right below that pivot. That pivot really basically is at the higher high. So that's what it's saying. So not a bad stock. Very good. Thank you for that. Thank you for that, Charles. Really appreciate it. Let's take a look at some of the TikTok people. What about, and this is KNDI, this is from Clown Killer 45. Hey Jim, what are you? No, let's look at SoFi first. SoFi, I think, is going to be kind of a sad story. SoFi, but let's look at it. SOFI, of course, this is the company that does the credit scores, and they're called SoFi Technologies, but really, it's a credit rating company. Sort of automates that process. I'm not really that impressed, because if you can see, let's go to the weekly chart to show you kind of what's happened with the value destruction here. It was all the way up. It was all the way up here on a split adjusted basis at about 24. Now it's at about 5. So it has lost 64% of its value. Now, I probably would not short this because typically you want to short something that has at least 30 or 40% left to go down. This one has gone down already, 64.4%. So not looking good there. The relative strength on this one, not very good. 22, that means, of course, that 78% of the market is better than this stock. And the question is, would you buy, would you buy this as a reversal? I don't think this is compelling enough. I don't like buying anything below that black line. And what that black line, of course, is that's the 200-day moving average. So I would not buy this. It's earnings in 7 days. I just think you got to avoid it. I hate to tell you that because it's, it was such a good stock. I did make some money on the stock, but now is not the time. The things that worked before might not work as well again. When I sold Microsoft way back in 2000, actually it was in 1999, it took 17 years for the stock to come back. Sometimes they come back, and that's Microsoft. Sometimes they never come back. So that's one of the things. You don't want to catch a falling knife. You don't want to buy a stock that is declining like that. You want to wait until that uptick because, boy, you think, wow, it's such a value. It was, thousands before, but it's just going to keep on going down. That's happened to me before. Please don't do what I did in the past. So be careful here. I don't think you want to buy SoFi. I don't really think it's going to give you the right look. All right, Sam is looking at MSM. Let's look at it real quick. Here we go. MSM. And this is interesting. Distributes maintenance, repair, and operational supplies from a fulfillment center. So it's really a distributor. I'm not exactly familiar with this stock, but let's analyze it. As we would normally do. Let's see. First of all, let's look at the trend. This is the first thing you want to do when you're analyzing a stock. Well, it looks as if this stock hasn't done a lot. I mean, it's in a downward trend, but just barely. So it's pretty stable. Look at that, going all the way back to June 2021, and it's been in a slight decline, but very, very stable. But basically in a downward trend. So nothing really exciting there, but nothing really bad either. So that is a plus. It's in the tools and related machinery area, which isn't a bad area. 76 out of 197. Let's look at the competition. I always like to see the competition, where that is, and just where that industry and sector is. So let's look at that group. This is not a group that I have done a lot with, to be honest with you. The number one, according in this, is a company that I'm even not for AIT. Then Lincoln Electric. I'm familiar with Lincoln Electric. This is a company that sits in Cleveland that makes welding equipment. And then there's Granger. Yeah, I think this is okay. This area is okay. But I think that there's better opportunities in the market. I probably would not be a buyer of this just because I think that there's better opportunities in the market. All right, Bomadoc is asking about the Spider. And that, of course, is the ETF that mimics the S&P 500. So let's look at the SPY. And by the way, if this is one of the great ETFs. I mean, I know many people that have been in this one for years, and basically what they do is when the market is going up, they buy the spider. When the market, starts to get into correction, they sell it and they wait and then they buy it again. So I've seen some people that have had some very, very good success just buying the spider, because really you're buying an index. Now, the thing about the spider is it's it has sort of been, we've been in this downward trend. If we look at the weekly chart since about June, like 21, you can see it kind of made its high point there, but it looks like it's starting to come back now. I heard another analyst indicate that they were looking at resistance at about 410, which is right about here. Okay, so I definitely think we have, at least based on that, we have a little bit to go up on the upward trend. We're right at 400 right now. We had a nice day, but it was weaker. I wish this number had been positive and not negative. But we had a nice 1% gain on the spider today, but on weaker volume. So that really is a little bit concerning. But I definitely think that this upward trend has some legs to go. I want to kind of look at the 60-minute chart just to see kind of how it's been trading for the last few days. So you can see when it comes up to 400, there's some resistance there, but the real resistance is at 410. And the reason I'm going back here, and that was made back on the 12th of December. See, that's why 410 is significant. That's the reason why some other analysts besides me say that there's resistance at 410. This is where it's coming from. It's not just They're not just pulling it out of the air. This is where it's coming from. This was the high that was made back in December, about December 12th. So we this is how it typically works. It'll come down. We're kind of in that base, and then we're coming up, and then so basically, I think we're going to be an upward trend for a while. Not for a while, but from 400 to 410, I think we're going to definitely be in an upward trend. If we can move beyond that, then we may have a really nice rally. But for right now, I think we're kind of getting some support at 400, and we're moving up. So that's my take on the spider. The spider is a very important ETF to analyze because it covers such a broad range of stocks. But that's where I think we're headed upwards, even though we did pull back and then it got support at the 400. I think we're going to have another leg up, and that leg will be from 400 to about 410. So thanks for that. I appreciate it. Great question. Starbucks, SBUX, a place that I have spent far too much money at. SBUX. There we go. Starbucks. Let's go back to the daily to see. Yeah, okay. It's moving up nicely. It's close to the 21-day line. It's gotten some support at the 21-day line. Let's see how far away it is on the technicals. Yeah, it's a good place to buy it. 2.29%. And if the economy does come back, this is one of the first ones that's going to be coming back. A little bit of concern on the lower, the less than average volume, but again, not bad. Restaurants and retail, this has been, I think that Starbucks will probably be one of the last chains to really go down because it's one of the, it's a luxury item that's not that expensive. So I think that's one of the best things about it. Would I buy it? I'm not really looking for retail right now. Just not looking for retail stocks. I'm kind of waiting to see if there's more strength in some of the areas. So that's really what I'm looking at. All right, Noah, thank you very much. Let's look at SPH. This is Noah Garza. Thank you. Thanks for watching the show. Appreciate it. Let's go over here and SPH. SPH. And Suburban Propane. Of course, retailer of propane. It's definitely propane is going to do well. along with all of the energy markets. I think, the energy has really just started its ascent. But here's the thing, I do have some concerns about this chart. One of the biggest concerns I have is that it is below the 200-day line. Also, another thing that I look at is the 50-day line as opposed in relationship to the 200-day line, and it's fallen below that. So it's showing some weakness and showing sort of a ceiling here at about 1625, 42 relative strength. And unfortunately, it is on a downward trend. I mean, even though it has made a movement up here. So I would be careful with this one. I kind of want to get a stronger chart. 44 on the checklist, not something I'd like. Well, not something I like to see. I'd like to see a stronger chart. On the pattern recognition, the pivot is 1775, and we're below that pivot. So I think I would avoid this one for right now. It's just not as strong a chart as I'd like to see it. I want to see a stronger chart than this. Now, let's go to an area of the market that I do think, again, major area of the market that is showing strength and is continuing to show strength. And that, of course, is the integrated international oil and gas. And so the symbols I'm going to look at is ExxonMobil. Of course, everyone has heard of that. That's one of the oldest companies out there. I do buy for full disclosure, I do own three positions currently in ExxonMobil. I because I do think the area is showing a fair amount of strength. So what I'm going to do is I'm going to move over to there so everyone can see it on TikTok. We had a nice day. We came off of the we came off the 50-day. We pulled back a little bit after hours. But if we look at the 60-minute chart, you can see you have a definite upward trend on ExxonMobil. Now, why is ExxonMobil important? Well, the reason it's important is because it's the largest component. Well, that and Chevron, the largest component of the XLE. So this is a good way to play the whole market, even though it's a single stock, because it is so strong. So I definitely think you need exposure here. But the one I would buy if I was starting a position would be HES, H-E-S. And I think that one has a better chart, at least for entry. And it's a little bit extended, but it's moving up very, very nicely. This is one I think would be good for your portfolio. It's starting to move. It's a little bit extended. Let's see how far above that 21-day line it is. Okay, it's 5%, 5.92%. So it definitely is still viable, but it's starting to get a little extended. So that's one that I definitely think you could definitely take a look at. All right. This is a question about the chip stocks and why are they breaking out? Because Chat GPS. This is what Microsoft is going to be buying. Now, here's the thing: they're buying this for I think $10 billion, but they're laying off people. That's not a good sign. The reason I believe that chips are starting to lead here. The reason I think chips are starting to lead, and it's just a guess, is because I think of the fear of the China situation with Taiwan. I think that there's a lot of investment that's going on right now in the chip fab area, especially related to the test equipment that's being bought. That's why AEHR is doing well, I believe. And I do think that the equipment to make chips, that's one of the better areas. And in terms of the chips themselves, I'm going to go over here to Lattice. This is one of the ones that I did double my size on, LSCC. I did double my size on this one. This one is reacting very, very well. This is reacting very, very well. But what I want to do on this Lattice is I want to look at the fabless area. Now, not all semiconductor companies are equal. Okay, you'll notice that Lattice is at the top of the list here, and then there's Mobileye. This, of course, is the self-driving car company. This one's a good company, but it's very volatile. That's the reason I don't own it. Another one that we might want to kind of hone in on right now is Rambus. This is an old company, but a good one, RMBS. So what I want to do here is on the semis coming out of, the semis are kind of coming out from sleeping. What I want to look at is Lattice compared to Rambus, RMBS. You'll notice that it's not all the semiconductors that are doing really well. Some of them, like NVIDIA, they're still pulling back and they're still not ready. But let's take a look at Rambus, compare with Lattice. This is another one that I have my eyes on, Rambus, because I do think it's looking very good. Oops, this is compared to the average. Okay, this is the entire average here. And what I'm going to do is I'm going to add I'm going to add Lattice LSCC so that you can kind of see. Lattice, of course, not doing. This is the G. This is where this is. This is the entire This is all of the fabless semiconductor companies. LSCC. This is one I own. This is Lattice, and then this is Rambus. Rambus is the better performer, and this is the one. If this rally continues, this is the one I'm looking to get into. Is Rambus, and it's this one's looking very good. It was up strongly today. This is one you want to probably put on your watch list here. I'm going to go to the weekly chart, and we're moving above 40, which is nice. Um, we did have increase in sales last quarter, but a decrease in profits. That's a little bit concerning to me. Earnings in 14 days, but Rambus does seem to look pretty good in terms of its performance. Let's look at the technicals. Yeah, it's a little bit extended though, 10% above the 20-day line. So I would probably watch list Rambus, but I probably wouldn't buy it until it came closer to that 21-day line. All right. Well, thank you, everybody. Thank you so much. UNH beat earnings but keeps going down. That's a good question. Let's look at UNH. This is university. Part of the problem, you can't use fundamental analysis all the time, and I know everybody. We're tempted to use fundamental analysis, but many times, it's not the fundamental analysis. It's something else that's going on. But let's look at UNH. Probably the last symbol for today, and take a look at it. All right, this is UNH, United Health Group, of course. Here's why technical analysis is so powerful. Yes, they did beat on their earnings. So let's take a look at the fundamentals on this. All right. So if we go over to the fundamentals, you see they're up. They definitely beat on that, and they're definitely up on profit. But the technical analysis, and that's the chart analysis that I'm showing you, that's showing a different story. This is why you've got to combine both technical and fundamental analysis. Right now, UNH is in a downward trend, and it's very clear. It made its peak up here at about 558. So if we were to draw a trend line, we would draw it like that, and we would set an alert on it. And if we did that, we are in a downward trend. So until it moves above about 500, I want to be watch listing that one, and I don't want to be owning that one, unfortunately. Why? Because it's in a downward trend. It's just that's the way it is. Even though they had this good increase in earnings, you notice when they brought out their earnings, even though their earnings were up, it went down. So the street was expecting more. So this is one of the reasons why you cannot depend on fundamental analysis totally. If they make an earning, sometimes that's not what the street's looking for. That's why you've got to do technical analysis. And currently, right now, this is in a downtrend. Also, you'll notice the relative strength. This is the most important measure of a strength. Is not the stock, but the stock against all the other stocks out there. Currently, UNH is a 27 relative strength. That means that 73% of the stocks are better than this one. What you have to do is you have to look for strength. That's one of the reasons why I own Schlumberger, SLB. Why? Because the Schlumberger group that it's in, put that up there, is the number one group. So let me see if I can show you that. There we go. So looking at Schlumberger, put this up here. There we go. Looking at Schlumberger, this is an example of a strong stock in a strong sector. The sector is number 1 out of 197, and the stock in that sector, it has a 100% checklist, and if you'll notice, it's also in its group. Oops, let's go to the group. I'm not getting industry group. Okay. Okay. On the strength of this, this is one of the strongest in a very strong group. All right, I'm giving you all this stuff that I'm not showing you. It's more important to show you. Oil and gas field services, relative strength rating 99. That means it's in the top 1%. That's why I'm looking here for things to own. I want to own things that are strong. And right now, at least as far as this goes, this is a strong area of the market. If we look at the competitors in this space, we'll notice that SLB is the 1, 2, 3rd stock in this group. North American and Mammoth Engineering are better. Now, these are smaller companies, but you'll notice that's one of the reasons why I own this. Why? Because it's in the number 1 group, and it's the number 3 stock in the number 1 group. It's in the top 1% of all stocks. So that's where we want to continuously look for strength. We want to look for strength. We want to follow along, because strength is where the big boys are going to invest. And that's where we want to be. We want to be in a place where they're investing and kind of follow along. Well, I'll be back tomorrow at 5. Thank you so very much for taking a look at the show. I very much appreciate it. Also, if you are interested in learning more about canceling trading and the kind of trading that we do here at Dallas Trading Floor, just go to www.dallastradingfloor.com and sign up for the free for the free list. You can unsubscribe anytime. It's a mailing list, and we put out trades and stuff that I put out from time to time. It's totally free, and it's www.dallastradingfloor. Also, I would like to have, if you can, please hit that like button. That really helps us. The more you like the show, the better off we do, and more if we get out there. So please like the show as well. I'll be back tomorrow at the same time at 5 o'clock. And till then, everybody, happy trading.